Getting paid monthly from stocks sounds like a dream, but with the right dividend-paying companies, it's very real. In today's video, we're revealing 5 of the best high-yield monthly dividend stocks in the U.S. for 2025, complete with full financial breakdowns, dividend comparisons, and real long-term value. Welcome to Evercrest Capital, and let's dive in. Realty Income Corporation. Realty Income has built an empire of over 15,450 properties across all 50 U.S. states and several international markets. What makes it special is its triple net lease model, where tenants pay not just rent, but also property taxes, insurance, and maintenance. That gives Realty Income extremely predictable and low-risk income. Market cap, $49.23 billion. Dividend yield, 5.59%. Stock price 2025, $54.51. Looking back 3 years, the stock traded between $55 and $70, staying remarkably resilient during both interest rate hikes and recession fears. Even better, Realty Income has raised its dividend over 120 times since going public in 1994. The dividend yield hovered between 4.5% and 5.8% over this period. Clearly consistent. Major tenants include Walgreens, Dollar General, FedEx, and 7-Eleven, which are recession-proof and nationally diversified. Why buy now? With the Federal Reserve expected to cut interest rates later this year, REITs like O could rally. Realty Income's long lease contracts mean steady income and monthly dividends that investors can count on. Risks. Interest rate sensitivity is the biggest concern. If rates stay high longer, REITs may underperform. Bottom line, for long-term investors seeking reliable monthly income with blue-chip tenants, Realty Income remains a foundational pick. Stag Industrial Incorporated. Next, we have a REIT powering the U.S. logistics sector, Stag Industrial. If you've ever ordered something online, chances are it passed through one of Stag's properties. Stag focuses on single-tenant industrial real estate, which includes warehouses, distribution centers, and e-commerce fulfillment centers. With over 500 properties across 40-plus states, it serves major clients like Amazon, XPO Logistics, and FedEx. Market cap, $6.50 billion. Dividend yield, 4.1%. Stock price, 2025, $34.82. Over the past 3 years, Stag stock has traded between $33 and $42. While it hasn't surged like tech stocks, its monthly dividends have remained consistent, yielding between 3.8% and 4.2%. And unlike many REITs, Stag has steadily grown both its portfolio and cash flow. E-commerce growth has driven demand for storage and delivery infrastructure, and Stag is right at the center of this revolution. Why buy now? America's supply chain continues to evolve, and Stag benefits from that. As companies look for regional distribution, Stag's assets become more valuable. Risks. Its properties are single-tenant. If one tenant vacates, it can take time to refill. So occupancy risk is real. Bottom line, if you want monthly income plus exposure to one of the most important real estate segments, industrial logistics, Stag is a smart pick. 3. Main Street Capital. Third on the list is a hidden gem in the BDC space, Main Street Capital. Think of this as a publicly traded private equity firm that pays you monthly. Main invests in small and mid-sized businesses that traditional banks usually ignore. They provide both senior secured loans and take equity stakes, giving investors a hybrid of fixed income stability and equity upside. Market cap, $4.71 billion. Dividend yield, 7.53%. Stock price, 2025, $52.95. Over the last 3 years, the stock moved from $38 to over $55, and the dividend yield stayed strong, ranging from 6.5% to 8%. Even more impressive, Main also pays special dividends when profits are high, usually twice a year. The portfolio is spread across manufacturing, software, healthcare, and energy, helping mitigate sector-specific risk. Why buy now? Main's management has a history of smart underwriting, and their equity positions generate capital gains during strong markets. This can further boost distributions. Risks. If small businesses default or the economy slows, Main's income could drop. but the company has weathered multiple downturns with minimal dividend cuts. Bottom line, for investors wanting both yield and growth, with a monthly payout, Maine is one of the best-run BDCs out there. 4. AGNC Investment Corp. At number 4 is AGNC Investment Corp., a mortgage RIT that's all about yield. This one's for the brave, but the income is hard to beat. AGNC invests almost exclusively in agency mortgage-backed securities, MBS. These are backed by government-sponsored entities like Fannie Mae, making them low credit risk, but very sensitive to interest rates. Market cap, $9.25 billion. Dividend yield, 14.37%. Stock price, $2025 $9.06. Over the past 3 years, AGNC stock has declined from $13 to around $9, before rebounding to $10. Dividends were adjusted slightly during volatile periods, but never suspended. Yields have ranged from 11% to over 15%. The company uses leverage to enhance returns. This boosts payouts, but it also increases risk. Why buy now? If interest rates begin falling again, which is expected, AGNC's net interest margin improves, which should stabilize or even increase the dividend. Risks, high leverage and rate sensitivity. Even small rate moves can cause large swings in net income and book value. Bottom line, AGNC is a high-risk, high-reward play for aggressive income investors who can stomach volatility in exchange for a juicy monthly payout. 5. Prospect Capital Corporation. And rounding out our list is Prospect Capital Corporation, with one of the highest monthly yields on Wall Street. It's a magnet for income-focused investors. PSCC is a business development company that provides debt and equity financing to middle-market U.S. firms. Its focus is on senior and subordinated debt, private equity, and structured credit. Market cap, $1.65 billion. Dividend yield, 12.69%. Stock price, $2025 $3.66. His stock has declined from $5 to $3.67 over the last 3 years. But the monthly dividend, currently over 12% annually, has stayed intact. For yield hunters, that's a trade-off worth considering. PSCC holds over 120 portfolio companies across financials, energy, healthcare, and real estate. Why buy now? If you're focused on income and reinvesting dividends, Prospect can build powerful compounding returns. Just understand the capital appreciation potential is limited. Risks, criticized for management fees, dilution, and inconsistent NAV performance. It's a yield machine, but not without operational concerns. Bottom line, not ideal for growth, but as a pure cash flow generator, Prospect delivers one of the best monthly payouts in the game. All right, let's quickly recap the powerful monthly income plays we just covered. Whether you're aiming to live off dividends, reinvest and grow, or hedge market volatility, these picks offer something for every strategy. Realty Income, the gold standard of monthly dividend REITs. Reliable, diversified, and consistent, a perfect core holding. Stag Industrial Stag, the logistics landlord of America, growing with e-commerce and supply chains. Main Street Capital Maine, a BDC with both cash flow and capital gains, making a hybrid income growth machine. AGNC Investment, AGNC, a bold high-yield play backed by government agency mortgages. Risky but rewarding. Prospect Capital, PSCC, one of the highest-yielding monthly dividend stocks out there. Pure income power for those who can handle volatility. Host returns. Now here's the key: diversification. Combining REITs, BDCs, and mortgage-backed strategies can give you income that's not only high-yielding, but also strategically balanced. If you found value in this breakdown of monthly dividend giants, imagine what your portfolio could look like with just one or two of these stocks working for you, month after month. Let me know in the comments which of these stocks are in your portfolio, or which one are you adding next. Engagement boost. Also, what's your target monthly passive income goal? Drop it below, and I'll help you reverse engineer it in future videos. Final close. Don't forget to subscribe, and hit that bell so you never miss high-yield stock breakdowns made just for smart investors like you. Thanks for watching. See you in the next one.